Hello everyone and welcome to the chart of the week. Over the past couple of weeks, I've actually been showing some valuation comparisons between Tesla and some other corporations and questioned how lofty the valuations have become. Of course, that spurred a lot of questions from you, the viewers, and one of you said, can you specifically go through and show me what the analysts are looking at with regards to Tesla? So I thought, you know what, let's make that the chart of the week. Today's chart of the week is going to be investors versus analysts. And of course, to keep in theme and to make sure I keep in line with what my viewers would like to see, I'm going to talk about two things. Number one, we'll talk about the investor on the left over here, and on the right we have the analyst who's poring over financial statements, documentation, and of course the objective of their firm to come up with a consensus about a specific security. And since you guys have asked, well, let's make it about Tesla. There we go, got Tesla on the screen. So I want to do one thing to start, and that is certainly let's look at the price and the valuation of Tesla. To do that, got to pull back the curtain a little bit and look at some price numbers. Now, on the screen, what you're seeing here are two lines. The first line is the price of Tesla. As you can see on the hard red edge is $1,302. Of course, it's probably higher now. And then down there it says PXTGT. That's the price target of $729.59. That's what the average analyst expectation is for Tesla. So of course, if you're looking at this chart as I am, you have to think to yourself, well, is something wrong here? If the analysts are expecting it to be at $729.59 and it's at $1,302, that's a huge difference. So who's right here? Is it the investor who is buying into the shares, obviously to own them and hopefully get some upside appreciation? Or is it in the analyst who is most likely more educated in the area of fundamental analysis, has gone through these financial statements and has a better understanding of the company? Now, you would normally think that the analyst would have a better read on what that company was doing, but that's not necessarily true. Maybe they're misinformed, maybe they have poor expectations, or maybe they just don't understand the company that is Tesla. Now, I'm going to take this a little bit further here and we'll break apart and look deeper into some of the numbers, mainly to look at things like what the analyst ratings have been and what Tesla has done in relationship to its price target. Now, here is a graph showing you where is price in relationship to its price target. And you can see for the most part that it has been above the horizontal line here, above zero. What that means for us is that the analysts were actually overpricing Tesla at that moment in time. Right now, you can see, certainly since late 2019, they have been apparently heavily underpricing or not setting the target high enough. As you can see on the chart above, how prices really started to rally here and really almost gone parabolic. But the analysts are still keeping their expectations very, very low. Now we can look at one step further and see what are the analyst ratings saying about the company, meaning where do we stand on the scale of 1 to 5, 5 being buy this company right now, it's awesome, 2.9. That's not really that good, especially in a market where everything is ripping to the upside, market's starting to look pretty good, fundamentals are looking fairly decent. You would expect this to be a much higher number like it was back in 2015 when it was above 4. Right now at 2.94, these analysts are not painting a pretty picture. They're not really optimistic on Tesla. You could say that a rating of 3 is pretty much a hold recommendation, meaning it's not a time to buy it. Of course, again, it goes back to wondering who is right here. Who's right? Is it going to be those analysts or is it the investor? At this point, it almost feels like there's this massive disconnect. Now, of course, analysts aren't always right. They don't always nail it to the dot, but with all their experience and education and training, you would think they'd be a little bit closer on with somebody like Tesla. So again, I just have to ask the question is who's right? Ultimately, we'll find out in the long run, but if I've learned anything about financial markets, there is this concept of elasticity. When something gets so far away from the market expectations, as you can see Tesla here, not only is price really accelerating above that price target, as you can see 729 versus 1302, that's not a small gap, that's a huge one. Right now, it would have to drop almost 40% from current price levels to get to the price target that analysts have expected. Now, I'm not saying it goes all the way back to 729, maybe it meets it somewhere in between, but clearly there's a disconnect and only time will tell who is right in this equation. That, my friends, is your chart of the week, and the reason I brought this one up is because Tesla has earnings coming up here very, very soon. A lot of people are talking about shorting it. be very careful out there. Even though it's extended, and even though the analysts think $729 is the price target, it doesn't mean it can't jump up to $1,500 or $2,000. Just be very careful out there, because right now you have a disconnect on Tesla. If you'd like to learn more, visit TraderMerlin.com or join us live on our show every day, Monday through Friday at 2 p.m. Pacific on YouTube.